Hello and welcome to another Elliott Wave analysis. So today I want to go through gold, right? Gold spot, right? So this will be a comprehensive um, walkthrough on the gold setup, technically speaking. Okay, so if you have been following me, you would have seen some of my idea on gold. Okay, so yeah, so I did make some ideas on Go before, right? All along I've been doing it, right? And then I also have introduced this big setup before previously, right? But today, for completeness sake, I will just go through again. Okay, so we look at this very big picture, which is on the weekly time frame. Okay, so from here, 2011 until August 2020, right? This 9 years period, you see that I've drawn a cup, right? And then after that, right, for the next, I think, 2 years, right, you will see another handle. So it's a cup and a handle. So it's a very big cup and handle setup over here. Now, where do we start our wave? We actually start around November 2015. Okay, so this is the lowest point, right? Then yeah, we start with one that is over here. You look at this first black line. Okay, so over here you see that label one red color digit one over here. So this is wave one from November 2015 to uh, August 2020. Now let's look at this wave itself. Okay, so it fulfills all the rule, right? And sometimes you can see a clear breakdown of five wave. For example, this wave three, 1, 2, 3, 4, 5. Okay, and a wave five. So this is the right side of the cup. The wave one is right side of the cup. Wave two forms the handle, right? So over here, this 2 years period is the handle period, okay, until November 2022. And then we have this wave three that lasted until April 2025. Okay, so this wave three itself, you will see that wave one is from uh, end October 2022 until May 2023. Okay, so this is wave one. And then wave two, ABC down until October 2023. And then we have this period that is wave three itself. Okay, so let me just uh, reiterate that this is wave one of three, wave two of three, wave three of three, wave four of three, and then a wave five of three. Similarly, for wave three, you can see a very clear breakdown, like 1, 2, 3, 4, 5 over here. Okay, and then the wave four itself is quite short. It's just 3 weeks, right? And then we have a wave five for wave five of wave three that is quite peculiar in the sense that wave one is very short, right? Wave two is in a sense longer in terms of duration. Wave three is not the longest. There and then we have wave four, and then we have a breakdown of wave five itself. Okay, so over here, it will be beneficial for us to look at the daily, right? So we go down one more level, right, and you see that this entire this entire wave is like this. Okay, so particularly we look at the wave five, right? Wave five of wave three. You see, wave one is quite short. Wave two is slightly longer in terms of duration. And then we have a wave three all the way up, right? That's also confirmed by the RSI. Okay, it has been in overbought territory for quite long. And then we have a relatively short wave four compared to wave two. Right? And then this wave five itself, wave one is the longest. Okay, and then wave two, wave three, wave four, and wave five. Okay, so this form the fifth wave of the third wave. Right, so this ended on 22nd of April. And then we can go down to hourly to study this wave 4 itself. Right, so wave 4 itself is 22nd April until 15 May. So let's take a look at this. Now we are on the hourly because I want to zoom in on this breakdown itself. Okay, zooming on this breakdown, you see that I've drawn a WXY, this black color line. Okay, WXY. Right, and then within this WXY, we can take a look at how these waves are formed. Okay, so we have a wave A, which is a 5 wave, right? And then we have a wave B itself has a lot of corrective structure over here. That's A B C B C B C, right? And then C wave itself is a clear 5 wave, so it's a A B C over here, right? And then X, which is almost like an impulse wave. And then we have this Y itself is formed out of 2 5 wave. Okay, so it's like 5 3 5. So you see that this A B C itself, we look at this blue color Elliott wave, right? So this black color one is the entire wave, and blue color one is the intermediate breakdown. And then we have the minor breakdown here, which is 1 2 3 4 5, right? And then ABC, right? And then 1 2 3 4 5. So this forms the fourth wave. Okay, so this entire period from 22nd April to 15 May, right? I believe it's about 3 weeks. Okay, this forms the fourth wave. So it's WXY for fourth wave. Okay, then since then on 15 May itself, right, you see one clear move up, right? If you really want, you can break down to 1 2 3 4 and 5, right? But I don't see a point in this one. So this one is actually our wave 1 of 5. Okay, so let me label this as wave. Sorry, let me go back here. Let me label this. Maybe we just change it to a small degree, right? So this will be a wave 1 of 5. Okay, and then we have another one which is over here, which is a wave 2 of 5. Right, so at this point in time, I do not know what is the breakdown, whether, I mean, in terms of the degree, right, whether this should be an intermediate wave or a primary wave or whatever, right? But taking a look at the previous wave setup, okay, I would say that this could be on a minor degree wave 1. Okay, so then minor degree wave 2, right? At this point in time, the degree is not that important, right? And then what is important now is that we recognize that we are going to a wave 3. Okay, wave 3 of 5. Now over the weekend there's some happenings, right, which will cause, I believe, tightly the price to get up, right? So in particular is the Moody's downgrade of US debt, right? So this will have a significant impact on the opening, right? What this means is that likely US dollar itself is going to crash at the opening of the new trading session, the new trading week, right? So what it means is gold may just get up. I do not know where. Okay, so at this point in time, it's not really good for me to say, you can long here, and then stop loss is here. Okay, because we do not know where the opening is. So but in terms of the stop loss, what is important is to know that if you believe in this wave count, then your stop loss will be here. Okay, 314, around 3146, and you should see a new high in gold. Okay, you see a new high in gold, which it should breach to new high 3500, above 3500. Okay, so but if you uh if you can take more risk, then you just put it here, but I think just put it below um 3154. Okay, let's go down to the hourly again. Okay, and my expectation is that it will definitely breach to new high. Okay, for the wave 5. Okay, so this is for gold. Okay, and it might come a bit late since that that we have this event over here, right? So depending on where it opens, right, you need to manage your risk accordingly. Of course, if it opens and it gaps down, right? If it breaches this point 3120, that means this wave count is invalidated, right? And for me, I will then expect that this is WXY, probably this XZ, right? That means one more wave down, right? So it's important to keep your stop loss, 31, probably at below 3154. Okay, so if it opens below here, you don't take a trade. It's as simple as that, right? Or if it opens below here and in between 3120 and 3154, you can do a long, but you set your stop loss below 3120. Okay, so for to be more versatile, I'll just put the stop loss lower. Okay, in case there is another wave down. Okay, then in that case, if it breaks down here, then we are looking at an entry that is 2950. Okay, so then this will be our alternate count, which is a Z wave down. If not, the idea is a long idea, right? And we should reach new high in gold. Okay, so that's it for this Elliott Wave analysis. Right, I'll leave this over here, right? And good luck in your trading, and remember to manage your risk well. Thank you.